Hello everyone, it's Red with RedDragonLeo.com. It's December 16th, 2013. It's been a while since I did the last video and the last blog post, which was back in, I guess, October. Just been so busy with a lot of other things. And the market is just boring me to tears here lately as they just refuse to let it go down. As you know from the previous post that was entitled, or I guess still is entitled, that the stage is being set for a possible 3,000 point drop in the Dow. We know that that never happened. Right after the Legatus meeting, we had the 17th was a possible date, but we all know that they were just playing a game, setting the date up for the 17th, and they had no intention of defaulting on the debt. And then, of course, we had the 22nd, which was just an 11 date. So those 2 days passed and nothing happened. And we instead continued to march up. So we obviously know that the meeting that they had from the 8th, October 8th through the 17th for Legatus, where all these elite people meet, that they decided to push it up and not let it drop. And that's one of the things we just don't know. We can't really tell and what's going to happen. We just guess at it and do the best we can. So, but as you can see, you look back in here into October and you can see we did have, you know, a nice down day here or a nice week down on the weekly chart, but they just said no, we're going back up. And so we've been going up ever since then and just putting in all kinds of new highs. We're finally getting to a point, however, that the market is looking ready to go negative. Now, I don't think it is going to go negative just yet because of where we are at. Obviously today you can see that's an up day, but this is just the first day on the weekly chart here. I'm borrowing Ron Walker's charts. Sometimes I don't even want to look at my own. These charts here are laid out so nicely, so credit goes to him. But anyway, what you're seeing there is the start of this thing getting ready to go negative. I don't think we're going to see it this month, December, because of the holiday seasons next week, and we're, you know, it's Christmas season and all this. I think we're going to probably stay above this zero line, and we're not going to drop negative until the first of the year. So I actually think we have one more high. As this goes down and puts in lower highs, the market should actually go up, and that will give you what you call negative divergence, where you're essentially losing steam and losing steam on the histogram bars and actually rising up and putting in a new high as the last retail person goes in and buys it. So that's what I'm thinking we're going to happen. So my best guess for a turn is the first week of January. That's where I think we're going to actually probably peak out and start to turn down. That's here on the weekly chart. We go ahead and look at the daily chart. Now you're going to see here Ron has drawn a left shoulder head, right shoulder, and you know, now personally I think they're going to trick people and this is not going to be a right shoulder. I think it's going to continue on up and put in a new high. And again, the main reason for that is the lack of the negative divergence. And you know, we do have a negative divergence up here, as he's pointing out on the RSI, the relative strength index, but I don't see it here on the daily chart going down. I mean, you know, we're still going down, and I think what needs to happen is what I think is going to happen is it's just going to bottom out here and start curling and go back up and just continue up and then put in a new high. And it's also, you know, it's just based upon the time of the year again too. You know, more than anything, it's based upon the time of the year. You can see it curling up right here. We'll probably go up here and hit right here, and you could probably draw a line in the future if you just go straight down here. And it's going to put maybe in the 65 to 70 range maybe. And maybe that will be a point where it kind of rolls over a little bit and tries to go down and stutters a little bit. But somehow or other, I don't know if it's going to be the end of this year. And maybe it just goes up here, comes back down, and goes back up, comes back down. Maybe it puts in some kind of triangle. It's going to be choppy, but I do not see it actually going down and, you know, starting our big move down. If we do have any more on the downside left, and I really just don't think we do, simply because of the fact that we're going into this Christmas season, it's light volume. But if we do, I'm still looking for this 1760 to 17 area to hold. So it's just maybe a slightly lower, and then back up again. And we actually had that 1770 area on the ES after, you know, last night. So that is possible that we come back down here and revisit it. Maybe put some type of triangle in. You just call that a bullish wedge. And then you pop out one more time into January to put in a higher high. And then you roll over. And it would all, at that point, be based upon the weekly going negative. And once the weekly goes negative, then you're going to start seeing some downside selling. And then you can also, right here, the main thing here that Ron Walker has pointed out here is where we are at right here on the rate of change. You can see we're at a 0 point. And you can either have a turn there or you can just continue back down. I think we'll have a turn, we'll go back up, and then we'll come back down one more time, and the next time we'll break it. And so that put us into January, first week of January. That's just my thinking on where we're going to go. And again, a lot of it is just based upon the time of the year. And then we'll, you know, then we'll go back down. So that means that this could turn back up and then go back down. And so, yeah, just based upon the lack of a positive divergence here, it is possible to put in that lower low right here, basically right on the green line. 1763 is where that's at. So I said 1760 to 1770 area. So that would be over here. It's a 50-day moving average. So that's a good possibility that we could have one more down. But again, I'm not looking for a whole lot. If I was to short any place, if there is a breakout right here, the point I would short is I draw a line right here from 1813 to 1811, draw it straight across there. And if you hit 1808, let's see, 1805 to 1808, somewhere in that area, if you hit in that area, that might be a short. That's about the only way I would even think about it. But again, I'm not playing it this time of year. I just wait till the first of the year. It's just safer to do that. Same thing here on a 60-minute chart, as you can see. It is very oversold. Look at where it's at, -6. Down here is at -6, and what I do is just ram. But we're not expecting that now because of the fact that the weekly doesn't support that. So again, if you look here at October, when it ran up here from this level, and you go back at the weekly, and you look at the weekly in October, well, the weekly in October was right here. It had plenty of room to go up. See, it came from 0 and started going up. Now it's going back down. So that's the reason that you would not expect this to go up again and have some huge rally like this. And let's see, same thing, 15-minute chart. You can see draw a line on down, and you can see that's where they hit resistance. I would expect them to break out of this. I don't know when. I don't know if it's tomorrow or Wednesday or Thursday. I would expect them to break out again and go a little higher. And like I said, somewhere in that area there. The line is off the scope here. And let's see here on the next one. Same thing. So you are getting to the point. You're definitely getting to the point. 5-minute chart here. And let's see, one more. There's a 30-minute chart. Again, draw a line from 1813 to 1811 going over here. And that'd be my best target that I would try to short at. But right now, you know, obviously it may dip back down a little bit before it makes another move back up. Now, let's get back to the post and what's going on in the post that I'm talking about with Lindsey Williams, because this is pretty important. So I'm gonna bring over here the gold chart here for you and just to look at, and we're gonna go with this with some lines. As you can see here on gold, this is a 2-year chart actually, and if you were to draw a line here that points down to about 115. If you get down to a double bottom there at 115, let's go back even further. Let's go back to the weekly. Yeah, you can see that's a pretty important level there, that 115. If you were to go down to that level and by, say, January or something like that, and the market starts to sell off the first week of January as I'm expecting, then you would expect it to first break through this downward sloping trend line and then on its way back up to this one and then on its way back up to this one. Now what I've talked about here in this new post with Lindsey Williams is you have to listen to his words. I actually listened to that video 3 or 4 or 5 times, trying to listen to the exact wording of what he's saying. He is not mentioning anything about buying gold, which is actually a good thing. He's not giving you any advice. He's not saying that gold's going to do anything. The only thing he mentioned of gold is that the new currency is going to be backed by gold, and he doesn't know what the new currency is. Although I believe I heard it somewhere that it's China's currency, which is the yuan. So I don't know that to be sure. So I wouldn't tell you to sit there and go buy the yuan, the Chinese yuan. But you just got to use your head with this. If Roosevelt did this back in, and let's just go back and look at this. Let's go back and look at the Dow, INDU. This is very, very important. Let's go back to all time. Let's look at 1929, or 1932, I'm sorry. Let's look at this period right here. Okay, this is the market here, and this is obviously the daily. And they basically did this in 1932. Roosevelt closed down the banks and revalued the $20 gold piece, reset it at $35 after telling everybody to turn in their gold. So I don't know if gold was even, if I can even go back and see the gold futures at that point. This thing is still loading. All right, so we're only looking at the index right here. So again, in this time period, I don't know the exact date it happened, but I know it happened in 1932. The stock market bottomed and they revalued the dollar. They actually devalued it by 40% then. Now Lindsey mentions 30% in his video. So they revalued it at 40% lower in 1932. The market rose up. Now this time around, what are they doing? They're doing this from a market high. They're doing it from a market high, and they're going to revalue the dollar. If they're doing it from a market high, I'm not sure how much of a sell-off we're going to get. Initially, there should be some sell-off as panic sets in, but at some point, because of the revalued dollar, there very well could be some type of, I don't know, inflation-adjusted market where it actually starts to go up. And we very well could turn and go back up to something crazy like 30,000 plus on the Dow in the next 2 years, maybe into 2016 or 2017, simply based upon them doing this crazy manipulation of the value of the dollar. Whereas in reality, if you drop it down 30%, shave 30% off of 30,000, and what do you got? Maybe 21,000 on the Dow? Either way, you know, they're going to play games with it here, and I just don't know how to play this. I don't think GLD was around back then, to where you could even look at GLD. Nope, it sure wasn't. So GLD all time only goes back to 2004. Well, that stinks, and I think I can't get the stupid profit charts to even show gold, GD. Maybe that's it. Okay, GOD. That won't even show it. I don't want to go back there. And let's see. That is not doing me any good either. I tell you what. Let's try this with. Let's try this here with stock charts, and let's see, stock charts. And let's try to type in gold and see if we can actually get it. Okay, GDX. Let's see if it'll go back that far. I don't know if it's going to go back there. No, and I do not have a. I don't have an account with them. I don't really need them, so I don't have an account with them. But what I wanted to find out was, tell you what, let me pause the video. I'm going to see if I can find a chart for you so we can really go into this in depth. Okay, so hang on a second. Okay, I was unable to find any charts of gold. I'm sure they're out there, but I did find this interesting article here on safehaven.com, and they just basically show the collapse of the stock market here in 1929 to 1932 and the rise of a gold stock. Homestake mining just absolutely exploded from 1932 forward, and this probably had something to do, first of all, with the fact that the market itself was collapsing, and there was a fear running to gold. So obviously in this range here, it was in, looks like in the, from 1929 to 1931, it looks like it's in the $75 range. Then it shot up to $100, and then shot up to 125, and then right around here in 1932 is when they basically announced that they were going to devalue the dollar, and it went from about $20 gold pieces, it turned out to be $35 to buy them back, and all of a sudden you see this massive takeoff in the home stake mining, which is junior stock market, which is what I've been trying to learn a lot about over the last year. And I made a lot of new contacts in this business, a lot. And if you're not on the newsletter list, you definitely should sign up for it and get on the newsletter list. We're getting better and better picks as we go along, and we fully expect that once the market does turn down, this junior stock market is going to explode. Well, I mean, here's the proof. Every time that there's a depression, the junior stock or penny stock market explodes. But getting back to this, what I'm seeing here basically is that gold does go up. Gold definitely goes up whenever you devalue the dollar. So the fact that Lindsey's not really talking about that is a good sign. We don't really want that to be known to the mass public. We don't want them to stop that. So if they do devalue the dollar, and he just says it's a currency reset. He did not say it was a devaluation. Matter of fact, he said just that in the video, around 22 minutes or something like that. Into that video, he states, he says, this is a currency reset, a worldwide currency reset of 204 countries throughout the world. It is not a dollar devaluation. Well, I don't know what you're going to call it. It's a currency reset. It sounds to me like a dollar devaluation. So if they're going to reset all the currencies where they are all worth within 5 to 10% of each other, and then they're all going to suddenly be backed by gold, and the United States is 30% down compared to the rest of the world, I guess, because of our massive debt. In other words, it needs to be lowered 30%. That's what he's saying. I don't know how else you can say this other than to think that gold is going to have to go up. Gold has to go up. Now, I don't know if I would trust going short the UUP, which is the dollar index, but I definitely would not. I would definitely not want to necessarily go long on gold. I'm sorry, I wouldn't necessarily want to go short on the market, because I just don't know if that's what the plan is. I mean, if they are planning on, I think I have GLD here, okay. So it's really going to be a tough call. All I know here is that if we hear it on the news that they're going to confiscate the pension funds, as they say, then we know shortly thereafter, within days or even that very day, they're going to do a dollar devaluation of some sort. They're going to call it a worldwide currency reset, but I would call it a dollar devaluation. But Lindsey's not calling it that, so So let's look at this very, very carefully. If this happens, you've got GLD. If it's at a support line at that point, if it's at this 115 level, and you're looking at it at this 115 level, and it's holding support, and maybe it's getting, and I don't know, maybe it even dips below there a little bit. But if all of these charts start to look bullish, I mean, look at this on the monthly chart. Look at this. This is massively oversold here. Massively oversold. Down to negative 7.5. And then on the weekly, we are coming off of a very oversold condition. Down here at negative 7.5, working our way up to 2.5. I don't know, folks, but you ask me, just from a technical point of view, if this thing starts to get close to zero on a weekly basis, and it kind of holds support in this area, this is a bullish falling wedge or triangle. I mean, you can draw a line down here if you want, and it'll be some type of triangle. And if that's the case, and we're timing this out around the next Legatus meeting of February the 6th through the 8th, I would tend to think that they're probably going to come out with some announcement around that time period. That's just speculation. That he says it's been 90 days from his December 4th video. That puts it to March 4th, 90 days forward. So if you're going to do this, if it was me and I was the elite, then I would do it after that meeting. I would announce it after that meeting, and that would give gold its spike. And if you were to spike from, let's just say 120, and you added 30% on it, you're going to 150 or something. So it's a huge move up. You could buy calls on it, and I can't tell you what to do. So I'm not. I'm just telling you, look at the charts. Here we are on the weekly, looking like we're ready to turn upwards. We've moved up from negative 7.5 to negative 2.5. You throw this out another month, and where are we going to be? I don't know. I mean, but if we get up there close to zero, I mean, look at where we're at here in the daily. We're still negative. If we go up here, come back down, get ready to go back up, we could very well be right into February. I mean, this is just the month of December. We could very easily be right into February and have not only this pointing up, but you could have the weekly pointing up as well, and the monthly as well too. And you could easily pop this thing up here. And maybe by the time that happens, this here line will be down to this 155 area, maybe, and it will, give it the resistance, and you'll have a pop to 150, then a little bit more, then you bang on it, then you drop back down, you bang on it. I'm just thinking that if there's a good chance for you to make 10 to 20 times your money all at once, this is a really, really good chance of doing it. So you do your own research on it. I'll try to keep you informed. I don't know if I'll do another post before then or not, but I'll try to keep you informed. We got to listen to what is said after this by Lindsey and see if they're going to trick him and trick us, or if they're actually going to do it. One of the other things you should be looking at is the month of January and February. You better pay very close attention to how many calls are being bought on the open interest of various strike prices. So I would start looking at the 120s, 125s, 135s, 150s, 155s, 165s, and look at them every day. And for the month of January and February, and maybe even March, and look to see how many open interest positions are there in any given day, and look for some large block to come through. If these insiders are going to do this, if it's going to be for real, you're going to see them come through and buy a massive big block. I'm saying 10,000 options or better would be a starting point, all in one day. So keep your eyes on the Mr. Topstep video. I know last time, I remember over 2 years ago, one of them, I don't know which one it was, I don't remember who it was, but one of the guys at Mr. Topstep came forward and said that they had a man came in with that they didn't recognize, a couple guys in suits, and bought a huge position on the dollar, meaning that they knew the market was going to go down and the dollar was going to go up. And sure enough, the next 2 or 3 weeks, the market sold off hard and the dollar soared, and these guys made a fortune. So you keep your eyes out for these insiders, folks, and please take screenshots of it. Use the free program by TechSmith called Jing. Just Google it, J-I-N J-I-N-G. J-I-N-G. Just Google it. And, get a screenshot of it and email it to me. Post it on the blog, and do appreciate it. Everybody else will appreciate it. I'll keep my eyes open as well, but I'm one person, so I do need your help. Sorry for the long video. That's about all. So for the rest of the month, or the rest of the week, rest of the month, maybe go down to 1760 area, 1770 on the SPX. But I'm looking for it to go back up in January, first week or so of January. That's when I expect the high in the market. And I'm just mainly going to be focused on this gold position, guys. So good luck, and I'll be around. You post a comment, I'll be sure to answer it. Thanks a lot, everyone.